Hey everyone, welcome back to the Tastyworks tutorial series. In today's video, we're going to dive deep into how to create spreads in the Tastyworks mobile app. For those of you new to spreads, I know this can be a little bit confusing, so I'm going to go through several different examples, both on different types of trades as well as different ways that you can do it. But I'm going to focus on the most popular trading strategies, so probably like vertical spreads, maybe iron condors, and let's say butterflies. At the end of it, if I didn't go over the strategy that you wanted to go over, just let me know and I can make a separate video for it. But diving right into it, let's first pull up an option chain and let's say we wanted to trade the, Apple options. On my left-hand side, you can see I already have it in my watch list. So one way to access the option chain is by simply clicking on Apple over there. Once the little stock profile page for Apple opens up, you're going to look in the lower right-hand corner and click on Trade Apple. From there, we're going to simply say we want to trade options. So we're going to click on the option button. And you'll see it immediately takes us to the option chain for Apple. Now I'm going to quickly describe what you're seeing on this option chain in case you haven't been here before, but starting on the left-hand side, you're going to see the expiration date for each one of these contracts. So you're going to see the expiration for January 21st, the expiration for January 28th, the 4th, the 11th, the 18th, and many, many more. To the right of that, in the center column is the number of days until expiration. To the right of that is the implied volatility as well as the implied move in the parentheses box. So for example, if we look at the February 18th options expiration, we can see that expires in 29 days from today, and it's got an implied volatility of 35.3% and an implied move of $9.75. You'll also notice up at the top a purple line which says E on the left-hand side and then a date. That is the earnings announcement for Apple, which in this case is going to be on January 27th. And then finally, you'll also notice that some of these options expirations have like a little yellow W next to them, and that just denotes that those are weekly options, whereas the ones without it are monthly contracts. Once we've decided which one of these guys we want to trade, we're simply going to click on the expiration date. So in this case, let's just go ahead and click on the February 18th expiration, which is 29 days out. Go ahead and click on it. From there, you can see it opens up the actual option chain itself, where we can see all of the available strikes down the middle. So we can see 145, 150, 155, and many, many more. You'll also notice that the in-the-money options and the out-of-the-money options are denoted by that little orange line going down the center. And you'll also see an orange bar next to some of those strikes, which just tells you the implied move for this expiration. Now at the very top, you'll also notice the columns, which are just telling us what each one of these numbers are representing. So right now, it's just the bid and the ask for the calls, the bid and the ask for the puts. And remember, to buy an option in this platform, you always click on the asking price. To sell an option in this platform, you always click on the bid price. But I should have some other columns up there, so if I actually scroll to the left, you'll also notice I've got a delta column. So I can see the overall delta for each one of these options contracts. And if I wanted to change those columns, maybe I wanted to add theta as well, or probability out of the money, I could simply click on the little gear icon in the upper right-hand corner, and I could edit table columns down at the very bottom. If I were to click on that button, you're going to see all of the different headers that I could add. And in this case, let's say I wanted to add theta. We're going to go ahead and search for that and click on the little bubble next to it. And I'm going to add probability out of the money as well. Now that I'm happy with that, we'll just hit the save and reorganize button. And now we can see the new columns that have been added. Since it looks good, we'll go ahead and hit back. And now if I scroll to the left, I can see those other columns up there, theta, out of the money, delta. And if I go all the way back, I can see the bid and the ask. Now, trading spreads in this platform is actually incredibly easy, and there's a couple ways to do it, but I'm going to show you my preferred method, which is actually picking the strikes myself. So let's say in this first example, I wanted to create a vertical put spread, and in this case, I'm going to sell the put spread. So the strikes we're going to look at in this first example is the 155 by 145 put spread, so we're going to sell the 155 and buy the 145. So looking to the right of the 155, we'll start with that one. We can see it's trading for $1.98 by $1.99. Since we want to sell the 155 strike, we're going to click on the bid price of $1.98. As soon as I do that, you're going to see that it gets highlighted in red because it's telling us we are selling that put option. Next up, we actually want to buy the 145 put, so we need to click on the asking price for that option. And right now we can see it's currently 83 cents. So let's go ahead and click on that. You'll now see that that one's highlighted in green, telling us we're buying that one. And at the very bottom, we can actually see the order tickets for each of these. Now, it might not look like it the way that it's listed out here, but these trades have to happen simultaneously. It's impossible for one to fill without the other filling. So what we're essentially saying is we want to sell the 155 put while simultaneously buying the 145 put, and we want to do so for a net credit of $1.17. Now, you do have the ability to adjust a lot of this stuff. So let's say the first thing is we only wanted to do this trade if we could get a $1.25 credit. So we're going to look at the limit price there and hit the little up arrow to $1.25. We're now saying we only want to do this if we can get a $1.25 credit. And if we wanted to, let's say, make this good until canceled, we could actually click on the More button on the left-hand side. You'll see a little menu pop up, which has a lot of different options, but the only one we're focusing on right now is the Time and Force box at the very bottom, which we're going to go ahead and click on, and then look at the very bottom and click on GTC, or Good Until Canceled. Now that we've got that set up, we've got the order ticket exactly the way we like it, we could also scroll down on this order ticket to see some important info. From left to right, we can see the overall delta for this trade, so we can see we do have a slight bullish bias. We're going to make $11.15 if Apple were to go up $1. You're also going to notice that right below delta is theta, and right now our theta is a positive number, $2.73, which basically just means we are benefiting from time decay. We're going to make about $2.73 with every day that passes. To the right of that, we can see our POP, which stands for probability of profit, is 79%. And that's the likelihood that we're going to make at least 1 penny on this trade. Meaning if we sell it for $1.25, there is a 79% chance we'll be able to buy it back for at least $1.24. To the right of that, we can see the BP effect for this transaction, which is negative $875. That's the amount of money that I need set aside to actually do this trade. Below that is the extrinsic value left in these contracts. Right now that's $125, meaning if time passes, Apple stays exactly where it's at, we would make $125 due to time decay on this transaction. To the right of that, we've got our max profit, and that's the absolute most we could ever make on this trade, which is $125. And right below that is the absolute most we could ever lose on this transaction, the max loss being negative $875. Now, if that all looks good, we're happy with the risk, we're happy with the potential profit, the probabilities, we can scroll back up on our order ticket, we can hit the review and send button, the big orange button, and we can just confirm that everything looks right. At the top, it says we're about to sell 1 put vertical against Apple. Just like before, it says we're about to receive a $1.25 credit. We made this order good until canceled. And we can see our max loss down at the bottom. If we actually wanted to submit this vertical put spread, we would hit submit. Since we don't actually want to do that, let's go ahead and hit clear, the little trash can icon. We'll continue out of that. And now we're back to the same option chain as before. So that first example was a short put spread. Let's next say you wanted to put on a long call spread. So we wanted to benefit from Apple going up, and we actually wanted to bet on direction a little bit more. So for this one, we're actually going to go a little bit further out in time. So we're going to minimize that expiration and go out to, let's say, August 19th in this one. Now, since we're going to be trading the call spread, we're going to look on the left-hand side. And in this case, let's say we wanted to put on a 170 by 190 call spread. So since we're buying the 170 call, we're going to go ahead and click on the asking price for that call, which is $14.30. Just like before, it gets highlighted in green, telling us that we're about to buy that option. From there, we now need to scroll down and find the 190 call because we're going to sell that one to actually complete the long call spread. And since we want to sell the 190 call to create this, we're going to click on the bid price, which right now is $6.90. From there, just like before, we can see our order ticket down below to buy one of the 170s while simultaneously sell one of the 190s. And remember, these have to fill at the exact same time. One cannot fill without the other also filling. Above that, we can see the limit price we're setting right now is $7.25. That's the total price for this transaction. If we were to scroll down in this little order ticket, we can see our max profit is going to be $1,275. Our max loss is going to be $725, which is what we actually paid for this transaction. And if we scroll back up, we can see the review and send if we actually want to submit it, or the more button if we want to edit something in some way. And that more button, by the way, where it brings up the little menu, is where you're going to bump up the number of contracts. So let's say we actually wanted to put on 5 of these long vertical call spreads. We're going to hit that little up arrow next to quantity a couple times and bump it up from 1 to 5. And you'll notice that I don't have to change each of them to 5. When I hit the up arrow on the quantity box, it's changing both of them. Because remember, this is one transaction. Just like before, if I was happy with it and I wanted to send it, I would just hit review and send in the lower right-hand corner. Now, it's also important to mention that you can also drag these contracts as well. So let's say I actually decided to go a little bit deeper in the money and I wanted that long contract to actually be the 165s instead. I could simply hold down on that 170 strike and drag up. I could also do the exact same thing for that short strike if I wanted to, just click and hold down and drag up. You could also do this while you've got the Greeks pulled up, so I could see how this changes the overall delta metric for this position, so how bullish or bearish am I going to be? What's my new theta going to be? My probability of profit, all that. Now, since I don't actually want to place this trade, let's go ahead and scroll up and hit what looks like a little feather icon in the upper left-hand corner and clear this transaction out of here. Next up, let's dive into how to create an iron condor on here, which is exactly the same process we just went over, except you're doing both the call side and the put side. So using the exact same example as before, let's say we wanted to sell the 150 put by 140 put spread. So we're going to click on the bid of the 150, click on the ask of the 140. Down at the bottom, you can see I'm now putting on a short vertical put spread, but that's only half of the process. So now we need to scroll down and do the exact same thing on the call side. So let's say as a part of this, we wanted to sell the 180 put. So we'll click on the bid of the 180 and buy the 190 call as protection to create that wing. Now down below, we can see we've got 4 strikes built out. And again, just like in the previous examples, all of these have to fill at the exact same time. One cannot fill without the other filling. But if we look at this order ticket, just like before, we put in the price that we want to sell this iron condor for, how many contracts we want to sell, all of that. Once we're happy with it, just hit review and send, and you can see the order ticket. At the top there, it says we're about to sell 1 Apple iron condor. We're doing so for a $5.65 credit. We can see our max profit, our max loss, our delta, theta, probability of profit, all of that important stuff that you might want to know. But since we don't actually want to place this trade, we're going to go ahead and hit clear, that little trash can icon, and hit continue. Now I think the last one we'll cover for this video, because I think you guys get the process by now. You just need to click on the bid and the ask of the options you want to buy. But the last one we're going to go over is a butterfly spread. Now, for the most part, I would consider a butterfly spread more of a lottery ticket because I'm trying to predict where a stock price will be on a certain day, almost at a certain time of day as well. But let's say I did want to put on a butterfly and we're going to shorten up this time duration. Let's do February 4th here. So we're going to go ahead and click on that one to open it up. Now, the reason I picked a butterfly spread for this example is because it's very difficult to do it with that same method I've been using. So what we're going to do instead is actually look in the upper right-hand corner where you see select. We're going to go ahead and click on that. And from there, we're actually going to click on butterfly. You'll notice to the right of that, it says we're about to put on a long butterfly spread on the put side, which is exactly what we want to do in this example. So I'm going to go ahead and click on the little arrow to the right of that. You can see that the butterfly spread gets built out for us automatically. And these aren't necessarily the legs that we want to pick. It's just right at the money. So what I'm going to do is actually move this where I want it. And in my case, I wanted those 2 short strikes to be at 157.5, 10 points down from its current price. So what I'm going to do is go ahead and click on that, hold it down, and drag it up to 157.5. I'm then going to do the exact same thing for both of those wings, dragging it up to 160, and then dragging this one up to 155. So now what I'm essentially saying is I think Apple is going to be at 157.5 on February 4th, right at market close. And we can look in the order ticket and adjust things just like before. We can change the limit price. We can change how many contracts we wanted to put on. But this is how I would create a butterfly spread in the Tastyworks mobile app, a little bit different than the previous examples that I showed you. There aren't many that I would do this way by going up in the upper right-hand corner and clicking on that little toggle button and then selecting the strategy from here. But the butterfly spread is one that I would do this way just to make it easy on yourself. Going back to the actual spread that we put on, if we hit review and send in the lower right, you can see it again, it just tells us exactly what we're doing. We're about to buy 1 Apple butterfly. We're doing so right now for a net debit of 14 cents. So again, that's the most we can lose is what we pay for it. And then the max profit is going to be the difference between the strike that we sold and the wing to either side. So in this case, the wings are $2.50 wide. We can make $250 minus what we pay for it. That's our max profit on this trade. If we wanted to submit this butterfly, just hit submit. In our case, let's just go ahead and clear it out and continue. And I know that was a lot. We went through several different trades, verticals, iron condors, butterflies, and I went through each one of them very, very quickly. So please let me know if you guys do have any follow-up questions. I know this was a lot, and I'll probably end up making separate videos for creating vertical spreads versus creating iron condors versus creating butterflies so I can focus on them a little bit more. But this was a nice rundown of how you guys can actually create spreads in this platform. Again, there's 2 separate methods, manually selecting the legs yourself, which is the first way I did it, versus creating the spread automatically by hitting that little select button in the upper right hand corner, the way we did it for the butterfly. But I hope this video helps. I know it was a lot. Please, again, let me know if you have questions. Otherwise, I hope you guys all have an amazing rest of your week, and I'll catch you all in the next video.